Hi everybody, my name is Faith here at Patrick and Rains. It's a pleasure to welcome you and thank you for attending part 2 of our digital seminar on the PPP Forgiveness Program, Peeling Away the Secrets of PPP Loan Forgiveness. We know this is still a really hot topic and there are a lot of questions that still need answers. We're still peeling away at the topic, which has evolved a lot over the past few months. If you have any additional questions, please feel free to get in touch with us. All information to contact us, email, phone number will be in the description box below. The digital seminar will be split up into multiple parts, so stay tuned for more. All right, PPP Loan Forgiveness Part 2. We're going to start with introducing the speakers. We have some SBA AI CPA questions and answers, and then we have conclusion. Quick disclaimer, the information presented here is not legal, accounting, tax, investment advice. This is for educational and general information purposes only. For advice on your unique situation, please speak to your tax advisor. All right, going on with our introductions, we have Mark Patrick, CPA, our lead partner. We have Tim Rains, CPA, our tax partner. Chris Loudy, CPA, our tax manager. Question 15. What if a business had employees who left for their own personal reasons or need to be fired for performance issues? Is the loan forgiveness still reduced for those employees?
The short answer is yes. A full-time employee reduction exception is available for any of the following reasons. The borrower makes a good faith written offer to rehire an employee during the covered period, but the offer was rejected. The employee was fired by the employer for cause. The employee voluntarily resigned. The employee requested and received a reduction in their hours. The borrower, in good faith, can document the inability to rehire individuals who were employees on or before February 15, 2020, hire similarly qualified employees for unfilled positions on or before December 31st, 2020, or return to the same level of business activity as before February 15th, 2020, due to the compliance issues arose due to COVID-19.
Question 16. Can you increase pay for employees during the forgiveness period? For example, hazard pay, bonuses, or other salary increases?
Yes, the salary increases in the form of bonuses are eligible for forgiveness to the extent that the total compensation to an employee does not exceed the annualized $100,000, which is $46,154 for the 24-week period, or $15,385 for the 8-week period, whichever you select. The owner compensation is capped at the lower of $20,833 for the 24 weeks, or the 2.5 month equivalent of the 2019 compensation for the 24-week period, which is capped at the lower of $852 of the 219 compensation, or $15,385 for the 8-week period.
Question 17. Can I use PPP funds to pay payroll expenses to employees when they are not currently able to work due to business being closed or for any other reason?
Yes. Based on the current guidance we have right now, the covered period is going to begin when the loan is funded. So for borrowers with a biweekly or more frequent payroll period, an alternative payroll period starting on the first day of your first payroll period following the disbursement date is what you would use. If the borrower is not able to operate, or maybe they're operating in a limited capacity, such as a restaurant facility, when the PPP loan proceeds are actually received, then the borrower may choose to pay employees who are not able to work. This choice may also help the borrower maximize your loan forgiveness, as the current guidance states that not more than 40% of the loan forgiveness amount may be attributable to non-payroll costs.
Right, question 18. Can a PPP loan be forgiven in whole or in part?
The actual amount of the loan forgiveness will depend on the amount of payroll costs and other eligible costs that are paid during the covered period. There are other reductions in the amount of forgiveness based on the percentage of eligible costs attributable to non-payroll costs any decrease in full-time employees, and decreases in salary and wages per employee.
Question 19. How are eligible payroll costs determined for forgiveness purposes?
Borrowers are eligible for forgiveness on the payroll costs paid and incurred during the covered period or alternative payroll covered period. Payroll costs are considered paid on the day that paychecks are distributed or when an ACH credit transaction is originated. Payroll costs are considered incurred on the day that the employee's paid is earned. Payroll costs incurred but not paid during the last pay period of the selected period are eligible for forgiveness if paid on or before the next regular payroll date. Payroll costs should be determined based on the interim final rule.
Question 20. What are the caps on loan forgiveness for payroll costs available for owner employees, self-employed individuals, and general partners?
For owner employees, self-employed individuals, and general partners, payroll costs for the 24-week covered period is going to be capped at 2.5 months of the $100,000 annualized payroll. That would be $20,833, or 2.5 times the 2015 compensation across all the businesses. For an 8-week covered period, this amount is capped at 850 seconds of the 2019 compensation, or 15,385. For general partners, the 2019 net earnings from self-employment is further reduced by 179 deduction, unreimbursed partnership expenses, depletion from oil and gas properties, and then multiplied by your 0.9235. No additional forgiveness is going to be available for retirement or health insurance contributions for those self-employed individuals or the general partners.
Question 21. How are eligible non-payroll costs determined for forgiveness purposes?
Any eligible non-payroll costs must be paid during the covered period or incurred during the covered period and paid on or before the next regular billing date, even if the billing date is after the covered period.
Question 22. Can rent or other eligible non-payroll costs be prepaid?
To be forgiven, the eligible costs must be incurred during the covered period, so prepaid costs would not qualify. Guidance specifically addressed that prepayments of mortgage payments are not allowed either.
Question 23. Are these expenses tax deductible if the loan is ultimately forgiven?
This is a hot topic, and I would encourage everybody to stay on top of this because this may very well change. But as of right now, the IRS Notice 2020-32, which was issued April 30th of 2020, states that no deduction will be allowed for an expense that is otherwise deductible if the payment of the expense results in the forgiveness of the PPP loan. So if you're using your PPP loan to pay this bill, the bill would not be deductible. However, our professional organization, the American Institute of CPAs, recently submitted a letter of support to all the legislative bodies involved in hopes to get some clarification on this issue. So please stay tuned.
Question 24. Is the forgiveness of the loan taxable income?
As Tim said, there's a lot of murkiness with the expenses. There's a lot of murkiness with the taxable income factor. Right now, no, the forgiveness of the loan is not considered federal taxable income. States are providing guidance on state taxability. Right now, that's included in the ASCPA state tax guidance chart. So that's another hot topic to keep an eye on also.
Question 25. Are payments to related parties such as rent included as eligible non-payroll costs?
Unfortunately, this is one of the many gray areas that we've not got specific guidance. So as of June 17th, there is no specific guidance on this point.
Question 26. What documentation is required to be submitted to the lender for self-employed individuals to support loan forgiveness?
There's going to be a couple of things that are required. First, certification that all the documentation submitted is true and correct, and the amount for which forgiveness is required was used in order to retain employees to make interest, rent, and utility payments. Second, If the self-employed individual has employees, the 941 state quarterly reporting payroll forms and any other equivalent payroll processing reports that would correspond to the covered period. Third, any sort of evidence regarding the rent, mortgage interest payments, utility payments for which the loan proceeds were used. And then finally, probably going to ask you for a copy of your 2019 Form 1040 Schedule C.
All right. And finally, question 27. How should the forgiveness portion be recorded for financial statement purposes?
The AICPA has a coronavirus audit and accounting resource page that can be utilized to assist in the preparation of financial statements for the impact of PPP loan forgiveness. Please look out for a future video from our insurance manager, Mary Odell, to speak more on this topic.